Interest rates have gone up dramatically the last 10 days because inflation is proven to be a little bit stickier than believed, and the market's had really an overreaction. The reality of it is the underlying data still indicates over the next 12 to 24 months that inflation is going to come under control. But since it was elevated, you've seen a sell-off in the stock market and you've seen a sell-off in the bond market, and it's the bond market that drives interest rates. And interest rates have gone from an average of like 5.99 to 6 to 6.82. Let me show you what I mean. This is Mortgage News Daily today. Let me pull this up and show you guys. All right. And this left-hand side over here, you can see that's today's average rate. And if you follow along my little cursor right there, you can see just, what was this, February 2nd, 5.99, right? And they slowly started creeping, and then boom, they just ran up. So we've seen a big run up here, and you can see it reflected, just to give you an example, Rocket Mortgage, 6.99, and then in the details, if you go down to the details, it's at a 2-point cost right here to get that. And then if I show you today's, for example, mortgage-backed securities chart, you can see here, let me bring it into view. When you see this going down, that means rates going up. And then lastly, I'll show you today's headline. And as you know, making this video, Dow's down 484 points on hot inflation report. So what's all that mean? So here's the message I have for you. We have a payment subsidy program that can get your buyers and your sellers, because your seller's going to need it to buy somewhere too, right? So this affects both. An interest rate still with a 4 in it. And we know, if you look at my last few videos, that 4.99 or below is what really starts driving people. So if you want to have some good production in April and May, there's a couple things you need to do. Number one, you have to really look at yourself and say, if you're not working with somebody that really knows what they're doing, like if you're not working with me or somebody that knows what they're doing, your lender. So for example, I know agents that hand out 3 and 4 cards. You're just going to kill your production because most loan officers aren't on top of their game. They're not great at selling, and and most of the loan officers never been in an environment like this. I have. I've been in environments all the way when rates were like, way over 10%. So I understand how to navigate these environments, and we have the programs and the way to present them to your buyers and sellers to convert them into immediate loans. So remember this message. Rates are up. Good news is there's a way to mitigate it, but you have to have the right plan. And the plan is not to send it out, send a card out to 3 or 4 lenders. It's not to, look at your current lending partner. If your current lending partner is not strong and able to convert, you need to get the right partner. I'm there to help you. Give me a call.